In a world grappling with economic complexities, a new wave of financial technology is democratizing access to credit and revolutionizing how we borrow and lend money. This transformative force is known as peer-to-peer or P2P lending. P2P lending bypasses traditional financial institutions like banks, connecting borrowers directly with individual investors willing to fund their loans. Gone are the days of relying solely on large institutions for financial assistance. P2P lending empowers individuals to take control of their financial destinies, offering a more accessible and transparent alternative to traditional lending models. Imagine a world where you can secure a loan for a new car, consolidate debt, or fund a dream project directly from individuals who believe in your financial goals. This is the power of P2P lending, a disruptive force transforming the financial landscape by connecting borrowers and lenders directly. Through online platforms, P2P lending fosters a more inclusive and efficient financial ecosystem. As we delve deeper into the intricacies of P2P lending, we'll uncover its mechanics, benefits, risks, and the promising future it holds for individuals seeking financial freedom and empowerment. The mechanics of peer-to-peer lending are surprisingly simple, driven by innovative online platforms that act as intermediaries between borrowers and lenders. These platforms provide a secure and regulated space for individuals to connect and engage in mutually beneficial lending agreements. The process begins with borrowers creating profiles on a P2P platform, outlining their loan requirements, creditworthiness, and the purpose of the loan. Lenders, on the other hand, browse through these loan requests, carefully assessing the risk involved and the potential returns on their investment. When a lender identifies a loan request that aligns with their investment criteria, they can choose to fund a portion of the loan or the entire amount. Once a loan request receives sufficient funding from multiple lenders, the P2P platform facilitates the disbursement of funds to the borrower and sets up a repayment schedule. Throughout the loan term, the platform manages all aspects of loan servicing, including collecting payments from borrowers and distributing them to the lenders who funded the loan. This streamlined process eliminates the need for complex paperwork and lengthy bank procedures, making P2P lending a faster and more efficient way to borrow and lend money. The transparency and accessibility of P2P lending platforms empower both borrowers and lenders to make informed financial decisions, fostering greater trust and accountability within the lending ecosystem. Peer-to-peer lending offers a compelling value proposition for both borrowers and lenders, disrupting the traditional lending landscape with its unique set of advantages. Borrowers, often burdened by high interest rates and stringent eligibility criteria imposed by traditional banks, find solace in the competitive interest rates and flexible terms offered by P2P platforms. P2P lending opens up avenues for individuals with limited credit history or those who might not qualify for traditional loans to access credit at fair rates. Lenders, on the other hand, benefit from the potential for higher returns compared to traditional investment options like savings accounts or bonds. By diversifying their investments across multiple loans, lenders can mitigate risk and potentially earn attractive returns. Moreover, P2P lending fosters a sense of social impact, enabling individuals to directly contribute to the financial well-being of others. Lenders can choose to support causes they care about by funding loans for specific purposes, such as small business growth, education, or debt consolidation. The transparency and efficiency of P2P platforms further enhance the lending experience, providing borrowers and lenders with real-time updates, clear communication channels, and simplified loan management tools. While peer-to-peer lending offers a compelling alternative to traditional lending, it's crucial to acknowledge the inherent risks associated with this evolving financial landscape. One of the primary risks for lenders is the possibility of borrowers defaulting on their loans. Unlike banks that have extensive resources to recover losses, P2P lenders rely on the borrower's ability and willingness to repay the loan. To mitigate this risk, P2P platforms employ sophisticated credit scoring models and risk assessment tools to evaluate borrowers' creditworthiness and determine appropriate interest rates. Another potential risk is the lack of a standardized regulatory framework governing P2P lending in all jurisdictions. As the industry continues to evolve, regulations are constantly being developed and refined. It's essential for both borrowers and lenders to thoroughly research and understand the specific regulations governing P2P lending in their respective regions. Additionally, investors should be aware of the potential for liquidity risk. P2P investments are not as easily liquidated as traditional investments like stocks or bonds. It's crucial to approach P2P lending with a long-term investment horizon and invest only what you can afford to lose. By understanding and mitigating these risks, borrowers and lenders can make informed decisions and navigate the P2P lending landscape with confidence. Section 5. Pioneering platforms. Leading players in the P2P lending landscape. The rise of peer-to-peer lending has given birth to a vibrant ecosystem of online platforms, connecting borrowers and lenders across the globe. These platforms serve as trusted intermediaries, facilitating the entire lending process from loan application and funding to repayment and investor communication. One of the earliest and most well-established P2P lending platforms is LendingClub, founded in 2006. LendingClub has facilitated billions of dollars in loans, connecting borrowers with individual investors seeking attractive returns. Prosper, another prominent player in the P2P lending space, boasts a similar track record, offering a wide range of loan products and a user-friendly platform. Funding Circle focuses specifically on small business lending, providing entrepreneurs with an alternative to traditional bank loans. These platforms, along with numerous others, have played a pivotal role in democratizing access to credit and reshaping the financial landscape. Each platform has its own unique features, fee structures, and target audiences. It's essential for borrowers and lenders to carefully research and compare different platforms to find one that aligns with their specific needs and risk tolerance. Section 6. The numbers don't lie. Growth and statistics of P2P lending. The rapid growth of peer-to-peer lending is a testament to its disruptive potential and the increasing demand for alternative lending models. According to industry reports, the global P2P lending market has experienced exponential growth in recent years, with estimates projecting continued expansion in the coming decade. In 2020 alone, the global P2P lending market size was valued at billions of dollars, with projections indicating a significant increase by 2027. This remarkable growth can be attributed to several factors, including the increasing adoption of Fintech solutions, the rise of mobile banking, and the growing dissatisfaction with traditional lending institutions. Moreover, the COVID-19 pandemic accelerated the adoption of digital financial services, further fueling the growth of P2P lending platforms. As more individuals and businesses embrace the convenience, transparency, and accessibility of P2P lending, the industry is poised for continued expansion, reshaping the global financial landscape. Section 7. Engaging with the future of finance. Your thoughts on P2P lending. As we've explored the intricacies of peer-to-peer lending, its mechanics, benefits, risks, and the promising future it holds, it's time to engage in a dialogue about the potential impact of this disruptive financial force. Have you ever considered exploring P2P lending as a borrower or an investor? What are your initial thoughts and perceptions of this alternative lending model? Do the potential benefits of competitive interest rates, flexible terms, and financial inclusion outweigh the inherent risks associated with borrower defaults and regulatory uncertainties? We encourage you to share your perspectives, insights, and experiences with P2P lending in the comments section below. Your voice matters in shaping the future of finance. Section 8. The potential of P2P lending, a new era of financial empowerment. Peer-to-peer lending has emerged as a powerful force, democratizing finance and empowering individuals and businesses to take control of their financial destinies. By connecting borrowers and lenders directly through innovative online platforms, P2P lending offers a viable alternative to traditional lending models, fostering greater financial inclusion, transparency, and efficiency. While P2P lending is not without its risks, the potential benefits for both borrowers and lenders are undeniable. As the industry continues to evolve and mature, we can expect to see further innovation, regulatory clarity, and increased adoption of P2P lending solutions globally. The future of finance is being shaped by disruptive technologies like P2P lending, and it's an exciting time to be a part of this transformative journey. We encourage you to continue exploring the world of P2P lending, stay informed about industry developments, and engage in conversations that shape the future of finance.